Kitco News special coverage of Bitcoin 2023 is brought to you by Coin Payments, crypto payments made easy.
I'm Michelle Makori. We are at Bitcoin 2023, the largest Bitcoin conference in the world, and we are kicking off our coverage with arguably a legend in the Bitcoin space, Michael Saylor, Executive Chairman and founder of MicroStrategy, a prolific investor in Bitcoin, best-selling author, and one of the biggest proponents of Bitcoin. Michael, so good to have you with us.
Thank you for having me.
Well, Michael, I actually had the pleasure of first meeting you at Bitcoin 2021. We had an interview prior to that, and then I had the pleasure of chatting to you face-to-face in Bitcoin 2021. And you said then that Bitcoin is going to be the emerging store of value asset in the 21st century, the dominant emerging store of value asset in the 21st century. In terms of how Bitcoin is being deployed as a store of value asset, are you where you thought we would be 2 years on?
Yeah, actually, if we look back to when MicroStrategy began this journey, which was around August of 2020, and we look at the performance of all major asset classes since that time period, Bitcoin's up about 140%. The S&P index is up maybe 25%. The NASDAQ is up in the teens, actually maybe even less. Gold is like a plus 1%. Silver's been down, it's lost money, and bonds have lost even more. So Bitcoin is the best performing asset since then. It is actually showing the promise of an inflation hedge and a store of value. It has achieved that kind of performance in a volatile fashion, but even on a Sharpe ratio basis, it's outperforming alternatives. And I guess the best alternative right now is really the S&P index, which requires that you take equity risk. The world wants a hard commodity money, but the second best commodity is gold, and it's just not standing up to Bitcoin at this point in time. And the weaker commodities like silver, soybeans, oil, timber, they just don't work because when the price goes up, you can make more of it. And of course, if you can't use a commodity, you got to go to a security. And if you go to a security, you've got counterparty risk because securities have issuers. And so Bitcoin is filling this void. It's the asset without an issuer. It is not just a commodity, but a scarcity. It's capped. And I think that's why it's outperforming all these other assets over this time period.
Well, as you mentioned, you were the first public company to have Bitcoin on the balance sheet as a reserve asset, part of the capital allocation strategy. That was in the summer of 2020. You've subsequently added to that position. You're up to about 140,000 Bitcoin with MicroStrategy. And at the time you described it, when you first purchased it, as a dependable store of value and an attractive investment asset with more long-term appreciation potential than holding cash. I mean, that certainly has proven to be the case so far. But again, in terms of adoption, are you surprised that it hasn't gotten more adoption as a treasury reserve asset amongst other public companies? By my count, according to CoinGecko, only 23 publicly listed companies have Bitcoin as a treasury reserve asset. I believe after MicroStrategy, Marathon Digital Holdings has the highest Bitcoin ownership. Given everything you've just described, are you surprised that more public companies don't see it the way you do?
Well, I guess we've gone from MicroStrategy being the first to there being 24 or 24. So I think going from 0 before we got into the market to 24 right now shows some promise for something which is completely new in the history of the human race. It doesn't surprise me. The reason it's challenging is a couple of factors. One is the accounting. The accounting was indefinite and intangible, and if I had to boil that down, that's toxic. If I wanted you not to buy an asset, I would make it indefinite and intangible accounting, because what that means is you always have to write it down, but you can never write it up, which means that you will never, ever, ever have an investment gain on an asset with that kind of accounting. It had that accounting because it was a new, novel, scary, not understood thing that no one used. And so the accounting industry took the most conservative view they could take, and perhaps that was reasonable in the 2014 timeframe or 2017. We're moving toward fair value accounting right now, and I think the first milestone we'll have to get over is we'll have to go to fair value accounting before a publicly traded GAAP reporting company can reasonably get enthusiastic about large sums of this asset. I think the second thing holding it back is crypto confusion. A lot of people had a hard time distinguishing between Bitcoin and FTX and FTT token and Terra and Luna token, and is that a stable coin, and all these other crypto assets. That got to peak confusion about a year ago when all the crypto companies bought at all the Super Bowl ads.
Yeah.
And for the last 12 months, there's been this crackdown, meltdown rationalization where every single one of these wildcat crypto companies has been going bankrupt, and all of their air tokens have been crashing, and then everyone promoting the air tokens is getting sued for pumping unregistered securities. Now that's a very expensive, like multi-$100 billion educational lesson for the marketplace and the media. Until we actually get assured clear distance, some amount of distance from that crypto crackdown, I think that conservative CFOs will be a little bit careful there. I think that the silver lining there is Bitcoin's credibility has been enhanced in the past 12 to 24 months, because all of the bankruptcies of the other crypto companies have illustrated economically why they are not assets without an issuer. If there was no issuer, there'd be no one to go bankrupt, right? So the bankruptcies have been demonstrative, and that has forced the regulators, both in the CFTC and the SEC and the like, to point out that Bitcoin is a commodity, and that has required millions, if not tens of millions of people to understand the difference or learn the difference between a commodity and a security. So Bitcoin's asset class, or its classification as a commodity, properly understood and broadly understood by the entire investment community, is kind of the second chasm we have to cross. The third chasm is the entire crypto industry right now is under pressure and crackdown from the regulators, and there's a lot of pressure on crypto exchanges, cryptocurrencies, crypto assets, securities. And until that's resolved and you see Bitcoin trading on regulated exchanges that have been endorsed by the SEC or by the regulators, I think there are a lot of conservative investors that will just stand off and wait. The way you'll know that happened is when the SEC approves a Bitcoin spot ETF. That's kind of an indicator that they've decided that they endorse the exchanges trading the asset. And they've never liked the fact that the asset Bitcoin is cross-collateralized and cross-traded with other crypto assets. The idea that Do Kwon could issue $60 billion of Luna and then issue $20 billion of UST and then buy $4 billion of Bitcoin backed by $60 billion of an air token and then wash trade it right on an unregistered exchange without surveillance. That has been a bother. That has been really offensive for regulators. So when the crypto industry gets cleaned up and when the investing public is educated and when the accounting is normalized, I think you'll see more conservative CFOs start to look at this as an asset they can allocate to in size.
Okay. A lot of points to touch on there. Let's look at the idea of a Bitcoin spot ETF, which you're saying would be the sign that regulators are on board with Bitcoin. Some would argue, though, that that potentially compromises the integrity of Bitcoin. That when you have ETFs, when you have futures, when you have derivatives, when you have all of these synthetic products linked to Bitcoin, it compromises the integrity of the core asset. It also allows for potential manipulation. You could have more paper Bitcoin than real Bitcoin. Many would say that we see something like that in the gold market. Is that necessarily a good thing, though, to have all of these spin-offs and derivatives of an asset like Bitcoin?
I think that the thing that compromises the integrity of Bitcoin now and in the past was the existence of the crypto exchanges and the crypto tokens that were actually trading Bitcoin. So it's FTX that compromised the integrity of Bitcoin because Sam Bankman-Fried took billions of dollars of Bitcoin under custody and then rehypothecated it and then sold it and then lost it, while it was conjoined with the trading of the FTT token, which he was manipulating via wash trading and insider trading. So the problem is Bitcoin being traded on exchanges or wrapped into securities that are unregistered, unregulated, offshore. And I think that the regulators are going to continue to pursue all of those securities. An unregistered security, an unregulated exchange, an uncontrolled financial instrument, those things are viewed as the problem that is impairing Bitcoin from it's impairing them from approving a Bitcoin spot ETF. If none of those things existed, and you were a regulated company, an SEC 40 Act company, say, or SEC 33, but especially in this case, SEC 40 Act company in the US, and you wanted to buy Bitcoin spot and then offer an ETF, I think that would be acceptable to regulators because you're a regulated and transparent organization. The thing that threatens the integrity of the asset isn't the security per se, it's the lack of transparency around the security combined with the ability to engage in insider trading to manipulate the price of the security. So in that particular case, that means that publicly traded companies in the U.S., let's say a public company in the U.S. that holds timber rights doesn't threaten the price of timber. They're disclosing that the timber that they're trading, and timber is a commodity. A publicly traded company in the U.S. that discloses their ownership of Bitcoin isn't the problem. The problem is offshore, non-transparent, unregulated, wildcat banks, cross-trading, cross-collateralizing, and conjoining Bitcoin with 10,000 other crypto assets.
Point taken on the public companies, but I guess my question was more in terms of even regulated derivatives, as we had, with homes and mortgage-backed securities and CDSs and everything sort of linked back to that, even though the core asset at some point may be sound. Is it a good thing to have all of these spin-offs, even if they're regulated, linked back to Bitcoin? Does it compromise the original mission of Bitcoin, which was a response to the 2008 financial crisis?
I suppose the Bitcoin purist would take the position you should only own Bitcoin and you should self-custody.
Are you not a Bitcoin purist?
I am a Bitcoin realist. I believe that if Bitcoin is going to be the solution for 8 billion people on the planet, then it's going to be inevitable that banks need Bitcoin and corporations need Bitcoin and governments need Bitcoin and cities and states need Bitcoin and nonprofit agencies need Bitcoin. And so at the end of the day, the city of New York is not going to allow the mayor to walk around with the Bitcoin, in personal custody. And it's not right practical for, the Defense Department of the United States of America to let one general have all the Bitcoin, right? So large institutions, churches, corporations, and the like, they're going to need an infrastructure of custodians and banks. And so I do think there will be a time when all the big banks will custody Bitcoin. Like if you're a 3-year-old child, how are you going to self-custody Bitcoin? When you inherited the Bitcoin from your grandfather, how are you going to self-custody Bitcoin when you're 12 months old? And if you're 85 years old with Alzheimer's, you're not going to self-custody Bitcoin either. So I think that there are all sorts of groups of people that can't reasonably be expected to self-custody. And I think, when you have a family or a family trust and there are 47 people in the family, you're probably going to use a trust company that will manage the Bitcoin for you. And I think as long as there are corporations, Apple Computer is going to have Bitcoin, and Apple is a corporation, and they're not just going to give it to Tim Cook, right? In fact, they can't, right? So if you believe nation states will continue to exist, then you're going to have Bitcoin held by institutional sources. They're going to have a bank to hold it for them. And if you believe in the continuation of cities and corporations and distributed family units, and if you believe in insurance, when you buy an insurance policy and you back it with Bitcoin, the insurance company is going to have a very particular way, and they're not going to let the insurance salesperson hold the Bitcoin for you. And so how do you do it, right? So I think that Bitcoin is inevitably, it's going to permeate all of the traditional institutions in the world in different ways for different reasons, economic reasons, physical reasons, political reasons.
On the point of regulation, some would argue that there has been lack of regulation by design. Coinbase's CEO said that the company would move out of the U.S. if they don't get regulatory clarity from American authorities. Coinbase was trying to sue the SEC to get more clarity on that, and I know that the U.S. Chamber of Commerce has backed Coinbase, filing an amicus brief claiming that the SEC's regulatory chaos is by design, not happenstance. Is that what you think is going on? Is it by design?
I think the regulators are of the opinion that they don't want billions of dollars of U.S. currency to circulate in dark pools in such a way that they evade the controls of the banking system, the KYC, the AML controls, and they don't want to be used for sanctions evasion. And for that reason, stable coins are a problem for them, and I don't think they're going to change their view. I think they've also decided that many, if not most of the crypto tokens are securities, and they're unregistered securities being manipulated by the issuer in an unethical fashion, and they don't have full disclosure, and therefore they're violating securities laws. And I think their opinion of those two things has strengthened in the past 12 months. I think the meltdown of FTX was a catalytic event that caused the regulators to decide that crypto exchanges, crypto securities, and cryptocurrencies that imitate the dollar are not really consistent with a stable world financial system, and they're going to take actions to shut that down everywhere in the world. I don't think anywhere in the world that's going to be tolerated. I think it's just a matter of time as to how long it'll take for that to be wound down.
Regarding Bitcoin, that does seem to be the one issue of clarity. There seems to be consistent clarity that Bitcoin is different because Bitcoin is a commodity. It doesn't mean that it's out of the crosshairs of Washington and regulators, particularly the Elizabeth Warrens of the world. What would be your message to Washington regarding Bitcoin?
Well, Bitcoin is the one universally acknowledged digital commodity in the world, and it is backed by a Bitcoin mining network, which represents digital power. So Bitcoin itself represents the world's most secure database, and the Bitcoin network represents the world's most secure computer network. So my message to Washington would be, if you want to take advantage of the world's most secure database and a fault-tolerant military-grade communications network, then you would want to embrace Bitcoin.
You have such tremendous conviction when it comes to Bitcoin. And I've wondered what your epiphany moment was. If you had an aha moment where it all sort of came together for you.
I think during the COVID lockdowns, when the interest rate went to zero, it became clear that if you had hundreds of millions of dollars earning 0% short-term interest rate, it's not an asset, it's a liability. $500 million held for a long period of time when the inflation rate is 20% and the interest rate is 0% has a negative real yield of minus 20%. Which means that your $500 million is worth $400 million 12 months later. So in a world where the monetary inflation rate is greater than the discount rate offered by the central bank, in that world, if you have positive working capital, if you have $1 billion in your treasury, when the negative spread is minus 10%, you're losing $100 million a year. So in that world, you can't rationally have a positive treasury balance. You need to have negative working capital. So in a world of consistent monetary inflation and low interest rates, the rational thing to do is to do an LBO and go into debt and actually not hold $1 billion in capital, but rather borrow $1 billion in capital and have a razor-thin margin of $10 or $20 million. The problem with doing an LBO and borrowing billions of dollars so you have negative working capital is the Toys R Us problem, which is eventually you have a bad quarter and you have no capital, so you go bankrupt. So it's like with your family, if I said all of your assets are being inflated or devalued, debased every year, and you go, well, my great solution is I'm going to give up all my family's assets, borrow as much money as I can, and then one day you're not going to be able to make the mortgage payment and all your kids are going to starve. So the epiphany of 2020 was the only path forward. There's two paths forward. Either I have to impoverish the company by loading it up with debt, and we're going to eventually trip and die, and that's why the mortality rate in all these LBOs is 99%. They all go bankrupt and they're torn to pieces, and it's bad for the employees, bad for the customers, bad for the shareholders. Or the other possibility is I have to convert my treasury into an asset that cannot be debased by the government. I have to have tangible assets. So if you have $500 million, are you going to buy $500 million of buildings or oil rights or timber or coal or soybeans or gold or Bitcoin? And I looked and I said, well, I can't find $500 million worth of art to buy. Art's a store of value, sort of inflation hedge. If you held it for 100 years, it's worth more today than it was 100 years ago. You can't say the same for the dollar. So I can't find art to buy. I can't, do I buy land? I can't find a portfolio of $500 million worth of commercial real estate to buy. It was all overvalued. Can you buy the S&P index? No. The problem with the corporation is accounting rules and law requires that no more than 40% of your balance sheet be invested in securities. There happens to be a carve-out to hold treasuries. Although treasuries are technically securities, they're deemed as property or commodities in the accounting profession for that purpose. But I just couldn't go buy the index. And if I did buy the index, the problem with that is the typical investor would say, why did you buy the S&P index when I could buy the S&P index? So you're not really adding value to an investor. So the question is, what is the most valuable king commodity that you can buy that's property and not a security, that actually adds value to an investor, that can reasonably be expected to appreciate in time as the dollar is debased? And that got me looking for either gold, like gold is sound money for 5,000 years, or Bitcoin, and I concluded that crypto gold was better than gold. If I could create a gold network with 21 million gold coins, if I could make it illegal to mine any more gold, if I could make it possible to teleport the gold, if I could make it possible to program the gold at 1 million cycles a second, that'll be better than gold. So I thought, well, I guess theoretically we could create that. And what happened in the crypto world is they created a form of crypto gold, a pharmaceutical-grade synthetic gold, but it's faster, smarter, stronger than gold. All of the advantages of gold, a bearer instrument with no counterparty risk that's a non-sovereign store of value, those are the advantages. None of the disadvantages of gold. It's expensive to move, it's centralizing, people can steal it from you, and gold miners keep debasing it by making more gold. So once we saw that, we said, okay, crypto gold looks better than soybeans, looks better than real estate, looks better than gold. What's crypto gold? Is it Bitcoin or is it some other crypto asset? And after studying all 10,000 of the crypto assets, you could start with the top 100. You concluded Bitcoin's the most decentralized. Bitcoin didn't have an ICO. Bitcoin didn't have a pre-mine. Bitcoin isn't controlled by a corporation. Bitcoin isn't controlled by the core devs. It isn't controlled by the Bitcoin Foundation. They fought a civil war over the future of it. People that wanted to corrupt it or change it lost the civil war. You got a winner. And so the provenance of Bitcoin indicated that it is, and truthfully, the digital synthetic successor to gold. And then the conclusion is, well, if Bitcoin works, then gold won't. Because every intelligent person with money has to choose one or the other. And so if they choose Bitcoin, Bitcoin is going to appreciate at a faster rate. Gold is going to fail. Eventually, people will sell all their gold. They'll buy Bitcoin. And not only will you not be successful holding gold, you'll lose all your money to buy gold. Hence, we would have been up 1% if we bought gold. And instead, MicroStrategy was up 140% to buy Bitcoin. So that was our epiphany. And to put this in perspective, MicroStrategy had a $600 million enterprise value in the summer of 2020. And today it has a $6.6 billion enterprise value. So the enterprise value increased by a factor of 10. Our market cap increased by a factor of 4. And we went from having a $500 million dead money asset, a liability on our balance sheet called the US dollar, that was always going to yield less than the inflation rate, to $4 billion plus of a digital asset, which is appreciating 50% a year for the past 3 years. So we transformed our company. In essence, you could call it a digital REIT of sort. Like, we basically backed it with billions and billions of dollars of a digital scarcity. And instead of having to basically give all $500 million back to the shareholders in a buyback, or do an LBO where we decapitalized the company where we had no assets, we flipped it such that today we have billions and billions of dollars of assets, and we're the best capitalized we've ever been and financially the strongest. And that in that journey, the market cap increased by a factor of 4. The asset base increased by a factor of 8, and the enterprise value increased by a factor of 10. And of course, we found an institutional purpose. Right now, MicroStrategy is in essence providing a security backed by Bitcoin that allows an institutional investor in a matter of 30 seconds to buy $10 million of exposure. And in the absence of MicroStrategy, that investor would take 3 to 5 years to go through the process of vetting the custodians, the exchanges, changing their charter, and reconfiguring their organization such that they could actually invest directly in a commodity.
A lot to unpack there, but the point is that out of necessity, Bitcoin was the only solution that presented itself. Whether gold is an answer or not an answer, I know you've had many debates with people far more qualified than I am to conduct them with you, but we'll leave that one aside. In terms of MicroStrategy's current holdings, and I understand that you're saying that it's a proxy way for companies to have exposure to Bitcoin. You currently hold 140,000 Bitcoin, correct me if I'm wrong, purchased for $4.17 billion at an average price of $29,803 for each coin. Now I understand that this is a long-term strategy and ultimately you're very bullish on Bitcoin, but you're a public company, you have a balance sheet, which looks good when the price of Bitcoin does well, and when Bitcoin dropped, it made the company look less good, shall we say. So as a company, I'm assuming you have models and you have forecasts of where you need the price of Bitcoin to be. What is that on a short-term basis? Where do you see Bitcoin, say, ending 2023? Where does it need to be for it to work out on the balance sheet of MicroStrategy?
Well, it's already worked out, right? I mean, the market cap is up, the stock price is up. The return for our shareholders since we adopted the Bitcoin strategy is it was like 150%. It was higher than the return on the Bitcoin itself. So our corporate stock actually has tracked with some volatility the Bitcoin performance, and sometimes in some periods we actually perform better than Bitcoin. So we've delivered shareholder returns in excess of NASDAQ, in excess of every big tech stock, in excess of every asset class, in excess of every enterprise software competitor, in excess of the S&P. So Bitcoin's done what it needs to do, and our company is fine. And as for where does it need to be, I think the key here is we're a levered Bitcoin play, but about $2 billion of the money we used to buy the Bitcoin was effectively equity. And about $2.2 billion was a debt instrument, although most of that is convertible debt, so it's convertible to equity. So only $500 million of the Bitcoin purchases were with actual debt, corporate debt or senior secured debt. And the company has generated positive cash flow, and it has Bitcoin assets far in excess of any of the debt instruments we have outstanding. So Bitcoin, I expect, will just continue to go up forever. It will go up forever with volatility. It's on a bull run now. It'll charge forth until it gets to some point. There'll be a contraction and a drawdown, and it will continue. We will just continue to acquire and hold Bitcoin. We'll do it with cash flows. That's accretive. We'll do it occasionally with debt if we like the debt markets. Right now, the debt markets aren't particularly amenable to corporate offerings. At one point, you could issue $1 billion of debt at 0% interest. That was much more amenable. So when debt markets are open, we'll use debt. When equity markets are accretive, and it makes sense to sell equity because it's accretive to sell the equity and buy the Bitcoin, we'll do that. When neither of them are accretive, we'll just use cash flows. And if we don't have cash, we'll just wait, because Bitcoin itself is the most thermodynamically sound asset, which means if we just wait for all the fiat currencies of the world to inflate as the world issues more dollars, pesos, bolivars, and euros, and yen, and yuan, it stands to reason that the price of Bitcoin measured in those units of account is just going to continue to appreciate to our benefit, the benefit of our shareholders.
Again, you give me so many bits to focus on in one answer, but let's focus on this tremendous conviction that you have. Is there any scenario, is there any development that could derail your thesis? I'm sure you did a very thorough analysis when deciding to go into Bitcoin as strongly as you have. Was there any scenario that you plotted out that said, if that were to develop, if that were to be revealed as true, if this were to happen, if this were to change, it derails your thesis?
You know, we scoured all of the property assets, art property, commercial real estate property, every form of property, and then we scoured all the commodities, and we considered every form of commodity from gold to silver to soybeans to oil to natural gas. And then we considered all the crypto assets. And at the end of the day, we concluded that Bitcoin was the best, and we made our decision. We've been executing the strategy. Since then, we spent thousands of hours studying every development in the crypto ecosystem, every development in the Bitcoin ecosystem, all the macroeconomic, all the political, all the regulatory moves. My conviction today and my comfort and confidence today is stronger than it was in August of 2020. It's gotten progressively stronger each year. And so I don't see anything that's a threat on the horizon at this point. But let me be clear with one other point, which is we're a publicly traded company, and our job is to execute a business strategy with transparency and integrity.
Yeah.
There are publicly traded companies that invest in oil fields, and there are other companies that invest in timber rights, and there are other companies that invest in commercial real estate. If you're an investor and you want timber exposure, you want the company that's investing in timber rights to do that thing. And if you hate timber and you want to short it, you're going to short that company's stock. And if you love timber, you're going to go long the stock. So MicroStrategy represents Bitcoin to a public company investor. And for people that are skeptical of Bitcoin, that have any number of fears, they think Dr. Evil will invent a quantum computer and hack Bitcoin, they will just short us. And our job is actually to be long Bitcoin so they can short us. And for companies that think that's silly and Bitcoin's going to the moon, they'll go long. But there are a lot of people that don't have an opinion whether it's going to go up or go down. They just want to sell the volatility. And they will literally trade the options. And there are some people that simply want to trade or arbitrage the convertible debt that we issued versus the equities versus our options versus Bitcoin options. And so the reason that MicroStrategy is meaningful and the reason there's so much interest in the company is we have a strategy that we're executing with integrity, with consistency, with transparency. And if you are a hedge fund, you don't want me to be a hedge fund. You know, there are people with Bloombergs that make 100 trades a day, and they might love Bitcoin in the morning and hate it in the evening. In order for them to trade our stock, they have to know that I'm not making 100 trades a day. And so they're looking for someone that's going to pursue a Bitcoin strategy. There's 10,000 other companies in the public market that don't, right? So if you want another strategy, you can find someone that loves fill in the blank, anything under the sun, and I wouldn't invest in that thing, but it's not my job to second guess those investors, and their view is, Mike, you're convicted 150%. Look, I'm 150%, 200% exposed to Bitcoin. They're not. They might be 1% convinced. So they've got $1 billion. They take 1% of $1 billion, which is $10 million, and they buy MicroStrategy stock because they want to get 1% convinced and 1% exposed. And if I were to go and I were to worry and diversify across soybeans and corn and oil and natural gas, and I represented 100 different things, I would be all things to all people and nothing interesting to anybody, because that's just a random index, a commodities index. They don't want me to do that. So our company strategy is just rational in order to be of service to the institutional investors. My personal view and the company's view is Bitcoin is the winner. It is the king of all commodities. It is the king of all cryptos. It just keeps getting stronger. And you are free as an investor, right, to agree with me and go long, or disagree with me and short my stock, right? And either of those consequences is fine with us.
Let's talk about some of the macroeconomic factors here, because as you said, you were looking at treasuries. Treasuries have not proven to be such a safe asset, certainly when you look at the banks that were buying treasuries only to have the Fed raise interest rates and then have their treasuries lose their mark-to-market value, which resulted in these banking crises and the banking collapse that we're seeing. And again, inflation was your primary concern back in 2020. So on the macro side, what is your outlook for inflation in the U.S. with a seemingly more aggressive Fed?
Well, I think that inflation is tossed around as a colloquial term, and then oftentimes central banks would like for you to define inflation as the consumer price index. And if the CPI gets too high, they want you to define inflation as the core price index, or they come up with any number of price indexes which are actually lower than the rate of monetary inflation. When I look at inflation, my question is, at what rate is the currency expanding versus scarce, desirable assets? And if the cost of something scarce and desirable is going up 20% a year, the inflation rate is 20%. But CPI normally measures not scarce assets. It normally measures the cost of generating boxed cereal, or the cost of a cheap cookie cutter apartment created with plywood, plaster, board, stamped out in 18,000 quantities. So I don't think the inflation rate is the CPI. I think right now the CPI is higher than the interest rate. So we do have a problem where on any basis your money is a negative real yield. But if I had to estimate, I would say the real inflation rate, the monetary inflation rate, is 10 to 15% a year in the dollar. The CPI inflation rate in Argentina is something like 105%, but that just means that the true inflation rate against scarce desirable assets must be 150%. So I think that everywhere in the world, you're looking at monetary inflation 10 to 15% right now, because everything's pegged to the dollar. The strongest currencies don't do any better than the dollar. And so I think your choices, you've either got something in the low teens as your inflation rate, or you've got a weaker currency and there your inflation rate is in the 20s, or you've got a weaker currency and your inflation rate is in the 40s, 50s, all the way up to 100 plus. And I think that the conclusion is nowhere in the world is there a positive real yield. There, in Argentina was like 90% interest rate. That's not positive real yield. There's no positive real yield in any place. There's just a question of how negative is it. And the conclusion is you can't hold bonds. The bond index in that period since we bought Bitcoin is down 18%. So if you were 10 to 1 levered and you put all your assets into bonds, then you're bankrupt. That's why the banks are bankrupt, because they were any bank that was 10 to 1 levered that put the majority of their assets into mid-dated bonds or long-dated bonds is technically insolvent. The irony, by the way, is if they'd all bought Bitcoin, they actually wouldn't be insolvent. But of course, you can't buy Bitcoin if you're a regulated bank. And the truth is, there really is no winning strategy for a regulated bank, because if the short-term Fed funds rate went from 0% to 500 basis points in 12 months, just about anything that's fixed income that you would have bought would have traded down. It's just a question of whether it will be trading down 5% or 15% or 20% over that time frame.
So do you anticipate more banking collapses then?
No, I think it's the politicians that decide whether the banks collapse, and they can choose to have them not collapse by backing them, or they can choose to take into receivership a bank, and then the creditors and the equity holders are wiped out and the depositors aren't. I think that's a political decision. So I think in most places, in the U.S., since the U.S. has the ability to create more dollars, I don't think they'll let depositors get wiped out. I do think they'll let some creditors and equity holders get wiped out from time to time to make an example of them. In the rest of the world, in Argentina and Turkey's and Lebanon's, etc., if you can't create dollars, then when their banks actually are veering near collapse, they're going to have to go to the U.S. regulators and ask for swap lines and be bailed out by either the IMF or by the Treasury. And if they are bailed out, then they won't collapse. And if they're not bailed out, then they will collapse. And I think you're seeing both of those examples now, and you will see more of them. So the conclusion is, under no circumstances would I have my money in a weak bank or in a bank in a weak country with a weak currency. I think that's basically playing Russian roulette. In the U.S., I would probably have confidence in my deposits. But if I were an investor or creditor to a smaller bank, I wouldn't have confidence in my securities.
Kitco News special coverage of Bitcoin 2023 is brought to you by Coin Payments. Crypto payments made easy.